Tariff deals with India, Japan, South Korea are in the works, and more than 100 countries are calling for deals, according to President Trump and people close to him. And we can expect Canada to meet with President Trump this week to negotiate some trade deals. There has been a lot of good news being injected into the public. We saw that Europe was getting some slack, and there was some trade exemptions when it comes to automakers. Canada is also going to meet with President Trump this week. We saw an upbeat in non-farm payrolls. China and the US were communicating through various channels. And so the market got really happy and optimistic. And so we saw the equities indices rallying for 9 days straight, the first time since 2004 that has happened. We saw safe havens weakening. So we saw dollar yen, dollar Swiss appreciate, and we saw gold taking 7% hits. Let's go ahead and see what the market is at right now, go over some possibilities and cover every which way things can go. And let's go ahead and see some trade management opportunities for my current positions. So let's get right into weekly outlook number 12. Looking at the US dollar here, we saw that this resistance now has potentially turned into support. Now, this monthly new candle barely printed. We have 27 days left. So there's possibilities that, with dollar weakening, we can go ahead and break this level and flush down lower, or we can get some kind of retracement in the meantime as we get more demand for dollar inflows. One of my opinions is with this increased optimism for US equities and trade deals start to get finalized, I believe in the short term that US equities and the US dollar are going to see strong inflows as foreign investors go ahead and reinvest into these assets. One of the things that happened in the COT reports, and I'll go over it real quickly here. If we just look at the COT data history for an asset like the S&P 500, for example, we can see that a lot of the bearish pressure or bearish momentum, however you want to call it, was due to not necessarily tons of short contracts being added, but rather lots of long contracts being removed at a time. We saw 38,000 long contracts exit the market, 78,000 long contracts exit the market, 66,000 long contracts exit the market, and 23,000 long contracts exit the market. So what that means is that investors ran away from these assets. Now, some of them were domestic investors, but a lot of them were also international foreign investors. And so what's going to happen, in my opinion, if we get more optimism in US equities in general, those foreign investors are going to go ahead and come back into the US. And what that's going to happen is they're going to exchange their foreign currencies into US dollars to go ahead and get reinvested back into US equities. I say this because we have to keep in mind that the US is the dominant leader as far as equities. Now, I know Chinese equities could be one of those things where, if you're looking at the long-term play, they could appreciate a lot and other things, right? But the US is generally the leader when it comes to equity investing. And if you look at something like the Euro Stock Index, if we just go to the monthly time frame, if you invested your money in 2000, you're barely breaking even right now. Whereas if you go to something like the NASDAQ and take that same approach, now we can't go back up to the 2000, but if you just look at 2004 till now, you're up a tremendous 2,300%. So in my opinion, I believe that, foreign investors are going to come back into the US dollar. And what that's going to happen is in the short run, we're going to go ahead and see some dollar appreciation along with US equity appreciation as well. Now, longer term, I do think that the US dollar is going to depreciate. Why? Because we're late on our rate cutting cycle. Every single country pretty much has started easing their rates, and they even anticipate going even lower, while the US dollar has been pretty much stagnant. If you look here, we've been pretty much hanging out at this 4.3 level where rates are at right now, pretty much. And, if we're going to cut, another 100 basis points or 200 basis points, we got some room to go here, guys. We got so much room to go. So short term, I'm going to play the long dollar, and I understand that we're going against the overall bigger picture here. So I'm going to be very careful and cautious in my trade management, but I'm going to take advantage while we get those inflows and trade deals get solidified. And once we get news that the US dollar is now being more confident to lower their rates, we can look at CME Fed Watch tool to see probabilities of rate cuts. Once I see this thing starting to move a little bit more, then I'm going to flip and go dollar bearish. But for the short term, I like playing the dollar long game, especially if uncertainty comes down. We even heard that Russia, Ukraine were coming to a deal, and that's another reason why, safe havens like gold really took a dive here. So if we see that plus trade deals being finalized, there's going to be a lot of more optimism and a lot less fear in the market. So that's why I'm playing the long dollar yen, dollar Swiss, short euro dollar, long dollar CAD, and that's my opinion on where we can go. So as far as possibilities, short term, we'll look at the NASDAQ here. As far as for equities, trend line to the lower, this area right here would have been where bears really had to step in to solidify the bearish momentum. And now we're only like 9% away from all-time highs here. So in my opinion, we could probably range here for a little bit until we get some certainties and solidified deals, and then we can start coming a little bit higher. I think in the short term, we could see this range bound motion. We did get some good earnings for stocks for Mag 7, and that's why these kind of just rallied up here. For the dollar, short term, I want to see a little bit of a rally. Perhaps we can get back into this 103 or 102 level, and then I can look for short opportunities. I want to see this level get hit. If this level gets hit, then I'll definitely go ahead and take my first short on the US dollar at this 102 handle. So let's go ahead and look at some current positions that I currently have, how I'm going to manage them, and how I need to be careful with them. We'll start off with the euro dollar. I'll just go down the list. Euro dollar, we are a little bit in profit here. We are in this range. I took a short. My stop loss is right above here. This is where I need to be cautious and mindful of. This level could be support. If we hit here and continue to bounce up again, then I might consider just taking my profit, sitting on the sidelines until we start gaining some more bullish momentum. Like I said, dollar, I want to be bearish on the dollar longer term and bullish on the dollar short term. And this is an area of interest where I think buyers and sellers are going to go ahead and have a fight. And I don't want to be caught in that. So if I can just take my profits somewhere in here, wait it out until we see some clear direction, I'll be more than happy to take that approach. Dollar yen here, I took off of the backs of uncertainty coming down. When I took this trade, I did see headlines like India going ahead and cooperating. Then I saw that Trump was giving some exemptions on certain industries like Europe with auto. And so I thought that, on the horizon, we were going to see some trade. Good news. So that's where I took this trade. Extremely small trade, right? Not a big winner because I know I'm going against the longer term viewpoint for the dollar. So bought here. This is a level of resistance that I need to be mindful of. If we go ahead and start flushing down or just hanging out in this area, then I might take profits here. If we go ahead and break this level here and continue higher, I'll go ahead and trail my stops, give it room to breathe, and ultimately target this level, where then I will evaluate and see what the conditions are at the time and see if I want a short dollar here or wait for another one here. Dollar Swiss, similar idea as far as tariff uncertainties and safe haven status. When all of the uncertainty was happening, we saw dollar Swiss take a dive because the Swiss is also another safe haven currency like the yen. So when we got to this level, if I go down into the lower time frame here, we were clearly to the downside with a lot of force. We started to consolidate, got this flush lower and started trending higher. I got confident, so I went ahead and bought dollar Swiss at this zone, and now I'm trailing my stop at this level that looks like support. We bounced off here once, twice, 3 times, 4 times on the NFP. We actually got a good number on NFP, 177K. I think it was a surprise of 47,000 extra jobs that we beat. So this also held and will support. So now I'm going to target this level here. If we see some reaction here and we continue higher, then I will do the same thing, trail my stop, give it room to breathe. Ultimately, I want to target this 8,500 level. The reason being why I like this 8,500 level, if we just look left here, this range was where price was hanging out at. So if I can get to the top of this range and short, I'll be a lot more confident shorting here than I would here, because the possibility is we could range bound, and I don't want to be caught in this range bound motion. So if I could just get short at the top of the range, if we do end up ranging around, it really won't affect me at all. Dollar Canadian is one of my losers. I don't like how it's acting. So higher time frame, if we go to the weekly here, where we can pretty much get a good illustration of what's going on. This was resistance, now support. So I did buy here at the more bottom of this range, but it's lagging a little bit and I don't like it. So I think what I'll do is try to hedge out of this position or cut it short, because we are seeing oil prices rise up a little bit And this would, correlation wise, this would not affect my trade really well. At the time I wanted to long this thing because oil was actually bouncing off of this resistance zone. It flushed lower with a lot of force and it's pretty much still down, but dollar Canadian's not really reacting to that. Now, a lot of it could have been because Canadian elections were happening this week. There wasn't really any movements there. So I want to see how it reacts. We got this wick here, but if we still continue to just hang out here, I'll just cut my losses. So that's pretty much my viewpoint here. If we continue to see trade deals coming to fruition and more demand for safe havens kind of fades off, then I'll continue to stay in my dollar yen, dollar Swiss longs. I'll continue shorting the euro in the short term because I do understand that the US is late on their easing cycle and they're going to have to do that eventually. And lately, we've been seeing some good growth, good jobs data that could give the Fed confidence to go ahead and start cutting those rates. So I'm going to manage my trades carefully, move my stops to break even. Now, most of them are already trailed into profit here. So what I'm going to do is manage those trades safely and protect my profits, be mindful of the news. And if something happens to where the uncertainty comes back into the picture, then I'll manually close those trades and then look for repositioning to the downside on the dollar. But for now, I'm going to stick with my bias until we get some confirmation that the Fed is actually getting more confident in their rate cutting cycle. Perhaps if we see the CME Fed Watch tool starting to switch of more probabilities of rate cuts happening in the near term, then I'll go ahead and reposition myself. And I'll definitely let you guys know on what I'm going to do with my trades. But thank you guys for sticking around. Have a safe trading week ahead. Bye-bye.